Hey, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is Wednesday, November 25th, 2020, the day before Thanksgiving. We've had the Dow hit 30,000 yesterday. Amazing. However, to be diligent, to be a smart trader, to be somebody who's also managing risk, some of these stocks are getting a little bit frothy, and we should be looking for some spots for these stocks to pause and then look for new opportunities. All day in the boot camp yesterday, some of these stocks like JMIA and stocks like that have just gone parabolic to the upside. We were harping on yesterday. So keep moving up your trailing stop, keep moving up your trailing stop, keep moving it up. Because look, let's face it, even Jim Cramer said it yesterday that this is the most speculative market he's ever seen. I don't know if I would say the most speculative market I've ever seen. However, it's way up there. But the point is, it's awesome. I want to get that clear. It's awesome. However, don't get lulled into believing that when a stock triples in 6 days, that's normal price action. That's not. That's amazing. Ring the register. Take some of it off the table. If you have a stock that's at $10, 7 days later, it's 36, take some of it. I don't know other way to say it. Take some of it. You can always get back in. One thing that I learned very early in my career, and it's probably something that most retail traders just really never are exposed to, which is trading around a core position. There's nothing wrong with having 1,000 shares at $10, seeing the stock go up to 30, book 700 of those 1,000 shares. Yes, have a nice holiday. And then you look to keep adding. If you think that the stock is going to keep going, especially if you consider yourself a trader, and we're not necessarily talking about investing, start to look to book some of those profits. And as it moves up, you scale out, pauses, you can put those pieces back on again, and you just keep trading it. So if a stock goes from 10 to 100, you're still involved, but you're not putting yourself in a position where if that large buyer is done, boom, comes all the way back down, and you turn massive profits into small profits. You know, that's the old joke on Wall Street. How do you make a small fortune? And the joke is you start with the big one. You don't want to do that. You want to see your account grow steadily each month. And that means you need to understand what a profitable trade looks like for you. So many times we have new people coming into the boot camp and they just want to buy, but they have no idea when to buy and they have no idea what a profitable trade looks like. So they end up running scanners and seeing this stock's up 10%, this stock's up 20%. And then when the stock goes up another 50, 60%, they're like, should I keep holding it? And they have no idea what they should be doing. So you need to have, there's order flow, there's tape reading, but then there's also risk and reward. And that last part there, risk and reward, is how much am I willing to risk because I can justify, I think I'm going to get to the reward. Thinking infinity is the profit target is just silly, quite honestly. And the reason I keep bringing it up is that there's a lot of stocks in the last 6 months, let's say from March to the stimulus package finishing in August, and now waiting, even since then, we've had sectors that have just exploded, stocks that have gone amazing level. Like Kramer said it perfectly, that it's the most speculative bubble he's ever seen. I keep almost warning people, this is amazing, but at some point you have to turn yourself into a trader and not somebody who's just hoping that this is normal. It's not. I'm encouraging you to know what a profitable trade looks like before you get in, and you can kind of reverse engineer that based on what you think you need to risk on the trade, which actually brings me to another point. We're going to be looking at some financial stocks today that have really bounced hard. Some energy stocks that have really bounced hard. And if you've been in the community with us, you know that we've been circulating in and out and really focusing on sector rotation and going from some of the strongest stocks, and they start to get weaker or not follow through. Then we find some more and we find some more, and that's what good trading is. However, when these stocks start to go parabolic, when they have like $7 trading ranges from the low to the high, and you're looking to get in the next day, but then you're telling me, well, I can't watch it during the day, which is fine. A lot of people have full-time jobs. There's nothing wrong with that. But that's your real risk. If you can't watch the market during the day, the minimum risk is going to be yesterday's trading range. So if you're risking $7 on the trade, you should be working hard to say, well, do I really think I could make at least 21? You're kind of reverse engineering a profit target based on the probability of follow through, the amount of risk you have to take, and where you think the stock could possibly go. And that might stop you from taking some trades. And there's really nothing wrong with that because the trade in the first place should only be taken if you believe the reward is realistic. So if the reward's not realistic and you're just putting on trades because you're chasing price action, you're going to end up taking trades where you could risk 7 to make 7. That's a break-even trade, which makes you a break-even trader. Not what you want to be. We're doing this so we can see our account go boom, 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 boom. And that only happens when you're in the right ideas. So what we're going to do is we're going to take a look at a lot of the financial stocks. We have a list of probably 5 or 6 of them that are on the watch list right now. Some of them are a little extended. Some of them are at the precipice of the latest we'll start getting in. We have the optimal entry. And then we have a couple of days later where it starts to not make sense anymore because the profit target is shrinking from the new entry point. So we're going to start with financials. We're going to start out with Goldman Sachs, JP Morgan, and a few of those. Take a look at a few energy stocks. We're going to look at some airline stocks as well, and cruise lines, and whether or not they're a good opportunity right now. They're breaking out, trading on future vaccine news. They've already extended how far they normally go. So are you trading for the next week to 10 days in those particular stocks? Or are you saying, I think sometime a year from now, they're going to be higher? Make sure you have your timeframes correct because it's very hard to justify a short-term trade saying, I think it's going up over the next week. And the stock pulls back on you and you're like, no, now it's an investment. That's not good trading. You need to make sure your timeframes are correct. So we're going to look at them as well. So let's head on over to the screen and we're going to start out with Goldman Sachs. So you can see 120 in Goldman Sachs and JP Morgan. We had this 104 level. They both exploded through both of those price levels. So now what do? Do you continue to get involved? Well, you need to first assess profit potential and where you think the stock could go in exchange for what you could possibly risk. So very similar to what we just discussed before. If the next level in JP Morgan is 140 and yesterday's candle is $7, so 7 times 3 is $21, and yesterday's close was 121 and change. Can you risk justifying $7 to make 17? It's kind of like right on that border. But do you see what I'm saying here? Some of these trades where they have massive expansion, they're very exciting. Let's do the same thing in Goldman Sachs. So Goldman Sachs actually has a bigger resistance level where it's at right now, where I'd be looking for it to get up to 240 and pause, not get up to 240 and explode through there. Price doesn't lie. That's one of the reasons you very rarely see me use moving averages, Fibonacci's, and all that kind of stuff. We want to be focusing on the actual price action, where buyers or sellers did something significant last time. How far do we think buyers or sellers will step up based on what the stock normally does? And you start to build these arguments. And again, that's the difference between chart reading and tape reading. Tape readers put the pieces together and say, you know what, that's a really strong stock, but right now it's not a good trade. That's what separates somebody who knows everything about chart reading from somebody who's a tape reader who actually gets paid. So the differences here is JP Morgan's on the borderline. You could start, which means that you reduce the position, your share size, and work it as it moves in your favor because it's extended, because the profit target's a little lower. You could take the trade, but your exposure is a little bit less. Goldman Sachs, a little bit different here. We're actually looking for a pause at this level and then make a run at 270. So a little bit different setups. So let's take a look at some of the other ones. CITIGROUP is a little bit more bearish. You can see immediately right here that JP Morgan and Goldman Sachs are breaking out. CITIGROUP is still, it got hammered last earnings, and now it's lower on that scale of expectations for follow through. Morgan Stanley, the opposite. Morgan Stanley actually making 52-week and multi-year highs right now. You can see going all the way back to 2016 and even further. So the next level here is 76. So again, you have to say, what does the stock normally do? What is the profit potential? Essentially what I'm doing here is I'm kind of throwing in a stocks for breakfast here because we're working on setting up the potential of the trade for what it normally does, how far it's come, and what it where you think the next trade could go to. So let's actually go back over to the daily chart of JP Morgan. We were just looking at the weekly chart. So if we reassess this trade in JP Morgan based on a daily time frame, a lot of people are swing trade off the weekly charts compared to the daily. Yesterday's trading range was roughly $3. Now you're risking $3 looking for 40. So you need to know your time frames as well. So that's pretty reasonable. Now you're looking at 3 to make 17. That kind of gets really close back to that risk reward that we want. Just to give you some more ideas, some other ones, Capital One Financial, also a nice breakout yesterday, and PNC as well. PNC is a little extended out of the other ones. I think I like JP Morgan and Morgan Stanley today. Dollar Tree exploded yesterday. Good earnings, broke out. You can see that we've been watching this 97.50 level. We were hoping it was going to pause at 100, but just exploded through that level. Now, what's the next level? Now we're looking at 117, which is not really a big profit target. So in our vernacular, and the way we look at this in the boot camp, because the stock is strong, trading the day after earnings, which is typically the way that I trade it, and the profit target is pretty close at 117. I wouldn't be swing trading this. I would be day trading up to the 117 level, looking for a pause and then a punch through 117. Also want to talk about Hess and some of the energy stocks. Some of these stocks are extended and into resistance. So they're no longer a new trade for me to be looking at right now because I want to keep my money working. Something that we talk about a lot is getting that allocation of capital, continuing to do the hard work for you. Right now, it's had its move. It's at resistance. Want to see this pause now. So we'll take that capital out of there and then go look for another opportunity for the next move, similar to what we just talked about. We actually have a short sale on the board today, which is Progressive. Progressive broke weekly support levels. Got a little bit of support at 88, but then after 88, we're talking about 80. So if the market should see some profit taking after yesterday hit 30,000, we're going to actually be looking at this as a short sale. BE. Really nice punch through yesterday. And here's the thing I want to talk about BE. Because of how far and how fast the stock just exploded, and we had the optimal entry a few days ago. Again, $7 is not a monster move, but for this stock, it is. So here's what we're setting up. We're setting up a trade for either Friday or we're setting up a trade for next Monday, which is I'm looking to buy the stock around 22.50. I don't want to chase this price up. I don't want to be involved on a higher opening where the stock pulls back. If I can get it somewhere around 23.50, and it stays there during that day and gives me a pause, which you actually might get this morning, that's a better price because I can manage my risk, and now we're expanding the profit potential to the next move. CGC also called out in the community yesterday. First day breakout, finally getting through 25. I'm looking for follow through despite today's lower opening. So I want to talk about the what we call the get out of the house stocks, the UAL, the DAL, the RCL, so airlines, cruise lines, that kind of stuff. Obviously, there is to the moon with these stocks right now because of how far and how fast they came down, deservedly so. And look, the world is not out of this yet. We just have a potential vaccine right now. The question is, how do you start working orders in these positions? How do you start to feel confident in these trades the first time they break out? Now, here's the thing. The last time it got here, it failed. The last time it got here, it failed. The last time it got here, it failed. This time looks a little different. However, the smart way to trade these stocks, again, we're talking about the airlines, Delta Airlines, United Airlines, ALK, Alaska Airlines, right? What LUV, Southwest. Then you're talking about RCL, CCL, right? The smart play here as this continues to unfold is to be working the position as it moves in your favor, get feedback from the market so that if you get these kind of moves or it goes from 70 back down to 45, you are managing risk with lower share size. But if it moves in your favor and starts to head back up, you're managing a position that's working in your favor with the right share size at the right time. And that's just good trading. Because and we were talking about this with somebody yesterday, there's so many factors around these get out of the home stocks. Any headline could shatter the bullish positivity on this stock right now and the sector and all of these right now. So you need to be aware of that. You're not just trading the order flow. You're not just reading the tape. There's daily headlines that could be coming out by the hour that could change this positively and negatively quickly. So I'm asking you to, if you're trading these stocks, if you're looking to dip your toes in, if you're going to do what we're saying right now, start to build a position in airlines and cruise lines and anything similar to get out of the home stocks, do it smart. Do it the smart way and start to build a position and stay deeper on your analysis. Don't just look at the charts. Make sure you have someplace where if you have all of those stocks in your list, make sure you're very aware of what the news is and stay on top of how and when you build those positions. So that's the smarter way to get in there. Don't get in there and be like, oh, if this thing goes from 70 back to 120, I'm going to make a fortune. Don't do that. Build the position, and as the world starts getting back to normal, you'll be very happy and you'll sleep a lot better and you won't need any Tums. It's just a smarter way to do it. So Have a safe holiday, everybody. Thank you so much for joining me today, and I will see you back here again on Friday. Thank you so much.